What's up, everybody? This is Lamine from investingsimplified.net. Today is Sunday, October 10th, 2021. Welcome to our weekend market analysis. Quick market recap. Looking at the ES Daily, this is the S&P 500. As we can see here, market found a temporal support right around 4260 zone, bounced for the last few days, and it appears this trend line that we drew since market peak in early September, market is finding a resistance right around that zone, right around 4400 on ES. Our base case is market will probably retest these recent lows, if not outright break, and come to a lower level before a bottom is put in. Why are we making that call? One, from a seasonality aspect, as we have been forecasting for the past few months, September, October tends to be the worst period for the equity market. So our base case is market potentially will find a bottom sometimes by end of October, and eventually will much higher. But until then, our base case is expect a retest here, and then on that retest, we want to see a bottoming process playing out, meaning that we need to see significant downside volume indicating to us that a low is potentially in, and then take some risk. So the first key level to pay attention to is this most recent low. As long as that support level hold, we are good. But if it breaks, it might cause a panic. But on that panic, our base case is going to be a buying opportunity. Looking at RSI, testing the neutral zone right around 50. As RSI start to roll over, expect market to come down. How low RSI will go remains to be seen. We'll keep an eye on that. Let's jump to NQ. Looking at the daily time scale of NQ, this is the NASDAQ 100 as we can see here. Structure very similar to S&P. The key level we are watching, first key level right around this 14,450 zone. If that level breaks, expect this prior resistance level, which is going to turn into a support, to be the second key level to keep an eye on. As long as these two key levels hold, let's say between now and the end of October, our base case is going to be a great buying opportunity for year-end rally. We still maintain that call. Unless something catastrophic happen, we still maintain that call. Our base case is expect market to come down over the next few weeks, and eventually market should find a bottom in this area and then ultimately start to go higher. Looking at RSI, not overbought or oversold, basically sitting at 43. We'll continue to keep an eye on that. So let's jump to TNX and dollar index. Looking at the daily time scale of TNX, as we can see here, since we call this bottom, this double bottom that rates put in end of July to early August, our base case was rates will continue to move higher. And as rates marches higher, the economically sensitive sector will be the main beneficiary. And thus far, if you look at the relative performance, they have been doing much better than tech and other sectors. And as we ramp into year end, our base case is those sectors will continue to benefit as rates continue to push higher, especially if rates break out of this prior high, because looking at the market structure, it looks like the next level where rates could potentially stop is right around 1.7 to 1.75. That's the next key resistance zone. Any break above this level, we'll keep an eye on the tech sector and see how impactful that will be on tech, because as rates move higher, it tends to put pressure on tech. This short-term pullback we are seeing was due to the ramp up we have been seeing on rates for the past few weeks. As we can see, S&P corrected decently, NASDAQ as well. So we'll continue to monitor the rates and see what kind of pressure it's going to continue to put on the tech sector, because tech is the market. If tech fall apart, the whole equity market is coming down. We're looking at RSI here. RSI is approaching an overbought zone. So that's something we need to keep an eye on as market pushes towards the resistance level and RSI become overbought. That could be a potential stalling time, meaning that market might be out of momentum, but overbought doesn't necessarily mean that market needs to correct. Overbought can remain overbought for a period of time. So as market gets to this level, we'll pay attention to price action as RSI gets above 70. So with that, let's jump to dollar index. Looking at the dollar index, as we can see here, finally dollar index was able to get above this prior to resistance. As we can see here, this level that we have identified for months we've been monitoring right around 93.50. Dollar index finally broke out, went all the way up to 94.50 zone, pulled back. This resistance level now turned into a support, and it appears market is digesting this move higher, basically building momentum. Any break above this 94.50 to about 94.75 zone, dollar index will be heading towards 96. So this is the key level to keep an eye on. As long as we don't fall back into this range, 93.50 prior breakout level, expect dollar to continue to move higher. And if dollar continue to move higher, expect pressure to be put on emerging markets, especially gold and silver. Those are the areas investors and traders might want to avoid as dollar continues to move higher. So let's keep an eye on 94.50 zone to 94.75. A break above that level, 96 will be the next stop. So with that, we'll end the review here. If you like the video, so please subscribe, give us a like. Until then, we hope you all have a blessed weekend and talk to you next week. Bye for now.